You can see how we've had the big fall here in the first portion of October, and then we had a good bounce, but it's starting to come back in. And what I'm watching for is I want to see which way does it break. Do we break this line or this line? If we break around 42.50, we should test and make new all-time highs. I'm in the camp we're going to break below 38.90 or so and see a drawdown to about 3,600 to 3,500, which is actually the pivot high right here of all of this consolidation range, right? I am still bullish longer term, mid to longer term. I'm absolutely bullish. But if you're someone who didn't buy any silver, I think it's going to pull back more here. I think we go down towards the $40 per ounce level. And then the next wave up, it probably breaks above this and heads quite a bit higher.
As November 2025 unfolds, precious metals remain in a turbulent yet bullish phase, with gold consolidating around $4,060 to $4,070 per ounce after touching record highs above $4,300 earlier this year, and silver hovering near $51 to $52 amid extreme volatility. Central banks continue their unprecedented gold accumulation, adding hundreds of tons in 2025 despite elevated prices, driven by de-dollarization efforts. Russia has even pioneered including silver in reserves alongside platinum and palladium, while emerging markets like Poland, China, and Kazakhstan lead purchases, creating a structural floor under prices amid geopolitical tensions and Fed policy shifts. In this rough-cut interview, renowned chart analyst Gareth Soloway delivers a contrarian yet data-backed view. He warns of near-term corrections across assets, expecting gold to retest $3,500 to $3,600, silver to dip toward $40 per ounce, Bitcoin to $73 to $75K, and equities S&P to 3,600, semiconductors potentially 40% due to overbought conditions and historical parallels, but remains emphatically bullish mid to long term, forecasting gold above $5,000 by 2026 fueled by money printing, high debt levels, and an impending recession that forces QE despite inflation risks. Let's watch clips from Gareth Soloway's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
There's a lot more downside in equities, right? So we're probably talking about at minimum a 10 to 11% S&P correction here that we've already started, and then likely we're going to see a 15+% in the Nasdaq. Now we're already in that free fall zone, but I'd love to show you this chart of the S&P, and this is what let me basically call the last time I was with you. I said, this is something that's very concerning to me, this parallel on the charts. And you can see here, this goes back to 2020. This is the COVID low. These are the bear market lows of 2022, and this is your liberation sell-off tariff low. And look at how it all aligns in a perfect line. And if you drag a parallel right up to the bull market highs of 2021, look at where the market's topped out right at that line. And I'm always in the camp of, we all have our personal biases, the markets can really go higher or lower. But in reality, the charts are the only way I get odds in my favor, the probabilities. And right now, that to me is a top until proven otherwise on the markets. Listen, there's a lot of new investors that have come in this market since 2020, right? In fact, a lot of the younger generation stayed away from investing until they were home with nothing else to do for months and months and months in 2020. We have this whole new generation of investors in that think that V bottoms are normal, that you drop 20% and in a month or two, you're back at all-time highs. I'm old enough from the 1999 collapse of the dot-com bubble, the 2007, 2008, 2009, to know that there will be a bear market that drags on for long periods. And my fear is that the AI trade has now topped out. There are so many issues starting to run up here on the AI trade. And I do think we're at a verge or on the verge of a big 40% drop in the SMH. Lots of people out there, they just spit out stuff. I always try to back it up because I think the viewers deserve that, right? I mean, it's not just an arbitrary statement. So this is your chart of the SMH, the semiconductor, the VanEck Semiconductor ETF. It tracks basically all of the semis, NVIDIA, Broadcom, etc. in it. This is your weekly chart. Now, what I was studying here is this is your weekly 200 moving average. And I said to myself, I wonder percentage-wise, how far do we get away from home base, which is a moving average, before we pull back to home base? And so I took my measurement tool here and I said, okay, here in 2021, we had a high. Let's do a measurement from the 200 moving average to the high. about 103%, right? 102, 103%. Then let's see how far away in 2024 we were before we corrected. We drag it up, basically 102%. And so I said to myself, that's kind of weird. So basically, we were above 100%. And then in 2021, we saw a 45% drawdown in the semis. In 2024, we saw a 40% drop in the semis after being 100+% up. And I said to myself, okay, well, where are we now? When we made our all-time high in the semis a few weeks ago, how far away were we? And look at this, 102% above.
Wow.
So what we're seeing here
Wow.
is that the data shows us that when we get this far away from our 200 weekly moving average, there tends to be a drawdown. And if we just average these last two drawdowns, you're basically in the
Yeah.
40% pullback range. For me, I'm looking at the charts here, guys, and really what we're seeing is a short-term high in gold. And I still don't think the selling's all over. I still think that there's too many weak hands. The charts are still too overbought. And I'm really looking for us to kind of, you can see how we've had the big fall here in the first portion of October. And then we had a good bounce, but it's starting to come back in. And what I'm watching for is I want to see which way does it break. Do we break this line or this line? If we break around 42.50, we should test and make new all-time highs. I'm in the camp we're going to break below 38.90 or so and see a drawdown to about 3,600 to 3,500, which is actually the pivot high right here of all of this consolidation range, right? So this is where we broke out to the upside and then ultimately, again, a retrace back in. I think, again, we're going to come down to 35, 3,600, and then we're going to push next year to 5,000 plus. I mean, that would be amazing in gold. I don't see it right now, but I do see it in 2026. So again, I think that overall, 2026, we will see it. And I think it's important to understand that we have the differences here, right? So in 1979, when we topped out going into 1980, we had Volcker raising interest rates. We now have the Federal Reserve cutting, Powell cutting rates. We have debt to GDP in 1980, it was about 32%. We now have it at 130%. And so there are big differences. You brought up the similarities between 1979 and the top, and you're right on that. And that's what we talked about last time. But it's important to remember that's a short-term pullback. And then I do think the situation is different this time, where we will see these new all-time highs much quicker than obviously what we saw in the 80s. So I do think QE is coming back, but I don't think it will be as aggressive as, for instance, COVID, even during the great financial crisis, because I
Okay.
do worry that inflation is going to make it tougher. And that's going to make it harder on risk assets, because we really rely on this printing of money, of flooding the system with money to push up asset prices, right? If you want stocks up, print more money, right? If you want gold up, print more money. And I do think gold's going higher, but ultimately the inflation needs to come down more if they're going to do that.
Hmm.
And I'm not convinced that we're going to see inflation coming down until we're in a steep recession. So number one, silver's always like that, right? It always gets people so hyped up because it's a cheaper metal, but it still has these monstrous runs. Now, the big thing on a technical perspective here is this chart, which goes back to 2008, right? So here we have a chart where the huge parallel. It goes back to the financial crisis low and the COVID lows. And if we drag a parallel up to the bull market high in 2011, look at where we topped out twice now on silver, right at
Yeah.
that line. Boom, it slammed back down. Now, I am still bullish longer term, mid to longer term. I'm absolutely bullish. But if you're someone who didn't buy any silver, I think it's going to pull back more here. I think we go down towards the $40 per ounce level. And then the next wave up, it probably breaks above this and heads quite a bit higher. I mean, you go on social media, you hear mainstream media, and it's all about the upside that will never stop. And in reality, things like to pull back along the way. And I think that's what we're seeing on Bitcoin. And so one of the most amazing things, and this is the simplest trend line I have on Bitcoin, takes us all the way back to the 2017 bull market high right here. Just
Right.
connect that through the 2021 bull market high right there. And it literally told us each time Bitcoin tested this line, it got rejected. Obviously, the latest time here with a big move to the downside. And I actually don't think it's over yet. I do think we're due for a bounce. Bitcoin is oversold. So I'm looking for a bounce back maybe towards 100,000. But I still think we have downside to about 73 to 75,000 per the
Okay.
chart. So, and let me just show you there. So it's important for everyone to understand It's not just arbitrary numbers, right? If we look at Bitcoin, we have all of this consolidation, which was in March of 2024 through all the way into September before a breakout. Notice how it was resistance along here, and then it became support for its springboard up there. That tells me we should see a pullback in that zone. It's also a 50% retrace of the bear market low to the all-time highs around 73 to 74,000. But when you're in a system where the money printing is likely just going to continue ad nauseum, how do you not
Yep.
go for a rarer metal like platinum and palladium versus gold? And I think a lot of people don't think that, right? The average person thinks, oh, well, gold is priced more. It must be rarer. It is not. It just has a bigger fan base, essentially. So looking at the chart here, we did slam into this resistance here from 2012, and that's what we're retracing off. But I agree. I think platinum's going a lot higher in the coming year to years. And we could really be looking at, once we break above this 1730 level, I think you have a good shot of tagging that 2300 level as early as the end of next year. So I don't know if I'm as bullish as your other guest, but I also
Yeah.
believe that
I-
there's upside here on this and on palladium. And I think the key is that if Bitcoin can become a store of value because there's a limited supply, then couldn't
Well,
platinum and palladium
th-
also be, because there's a limited amount that
that's
can be mined?
a really
And I
good
think
point.
it's one of those metals that are a sleeper, right? Because if you look at it compared to the run on gold, it is lagging by a mile, yet it's even rarer. And so I think as we see what the Fed is going to do and the government spending, and realistically, I'm hearing more and more analysts saying the only way out of the debt that the US has is to basically weaken and continue to print more money. It just makes me want to diversify away from dollars. And I wouldn't be surprised if we start seeing central banks saying, okay, we've accumulated a massive amount of gold. Now let's start putting at least a portion of platinum and palladium in our reserves as well. I think just be aware that at some point time is up for the market. Valuations, problems in the economy continue to mount. We've obviously seen the government shutdown. Now it's back on. But if you look at, I think the biggest thing to me is that if you look at the population in the US and in most countries, there's about 70% that are struggling right now because of inflation, and they weren't invested heavily in the markets or aren't invested heavily, versus everyone else who's still spending because they've had all these gains in stock markets. And once the stock market stops going up, that's going to be where those spenders, those consumers pull back. And once they pull back, the economy goes south very, very quickly. So I do think I'm still in the camp that we're due for a recession. It's been a long, long time since we've really had one that wasn't Fed induced by raising rates. And I do think we're at a point where we will see one soon. So I think, again, it just goes back that gold, silver, have some Bitcoin, have some other assets, just be diversified, because you want to ultimately be ready for anything that can come
Yeah.
our way as
Uh,
investors. And if we have a little of everything, then we can handle everything.
Gareth Soloway's technical analysis paints a clear near-term picture. Overbought conditions and historical parallels point to sharp corrections in equities, semiconductors, Bitcoin, gold, and silver before the final leg higher begins. Despite the looming 15 to 20% pullbacks, Soloway remains unequivocally bullish for 2026 and beyond, expecting unlimited money printing and a forced recessionary QE environment to propel gold past $5,000, silver well above prior highs, and risk assets to new records once the washout is complete. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.